As of early 2024, mortgage-backed securities on the Federal Reserve's balance sheet totaled 2.4 trillion. And that was down from 2.7 trillion in June of 22. So what you can see here, Chase, is the Fed is looking to get more of this off of their balance sheet. So consequently, there's more mortgage-backed securities hanging out there. They're getting sold for a lower price, which, by the way, creates a higher yield. This is the Fed trying to manipulate the market to slow down inflation. And again, we talk about this, and that is that housing is one of the largest components of the consumer price index. If they're going to impact that in any way, they have to impact housing.
Yeah. And what this is also causing, Bruce, and the story alludes to this a little bit, is a wider spread between the 10-year Treasury and mortgage rates, right?
Right.
And we've seen that spread be wider than historically, and in part because there's uncertainty of what the Fed's going to do next in around inflation and cost of money and everything else. And so now the spread is higher than it's been. Long story short, they're anticipating that as we get through these first few months of the year and the Fed meets a couple more times, even though they've indicated they're likely to cut rates a few times this year, there'll be less uncertainty. And therefore, that spread should shrink somewhat, although some people still expect it to be higher than maybe it was back when Fannie Mae and Freddie Mac were buying these mortgage-backed securities way back when. And if that happens, right, if the uncertainty goes down, that should allow for somewhat lower mortgage rates. So my understanding of this, right, is that they were offering cash, not much cash from what I understand, to get people to sign these incredibly long-term agreements. But what's also talked about in the investigation is that it's found the services amounted to fraud and deception. Right. It seems like a terrible idea to start with, even if there was no fraud and deception, but you add that in and certainly it's a recipe for something really terrible. Obviously, a 40-year listing agreement is prohibitively long and just seems like a crazy amount, right? The story goes on to talk about how some of these listing agreements even survive death of the homeowners, right? And that they were placing liens on the properties, even though apparently their marketing says that they don't do that. So there seems like a lot of funky business going on here, Bruce. And, this is unfortunate, especially for any industry, but certainly the industry we're part of, when you have people that are doing things that are just, so clearly and blatantly to maybe anyone who would be paying attention, not in the best interest of the consumer, then you're going against exactly what we stand for as professionals, right? In our code of ethics and otherwise. So don't love seeing stories like this because they happened at all. I do love the fact that we're, going after it and taking action to kind of correct whatever may have been done here. Rates coming down is good news generally across the board. And I think it will spur some of those buyers that have been waiting on the sidelines to get into action, right? Every little bit helps. And so that's good news. I think the challenge for those buyers that get into the market and off the fence, if you will, even with this lower rate, is they're going to run into a persisting inventory challenge, right? And we're not reporting inventory numbers this week, but we report them regularly. And what we know is that inventory is still very tight, very low in most places across the country and in most price points. There's always a little nuance and difference in every market and in every price point, but overall, inventory is low. So what does that mean? If inventory is low, rates drop, more people get into the market, then you could see an upward press of pricing. And or you can see this multiple offer situation coming back again. And frankly, Bruce, it really never left. It cooled down for a while, but the right property priced well. We're still seeing multiple offers on a lot of those homes because there's just not a lot of homes for sale, right? So it's good news, and it might be tempered with the reality of a short inventory market, right?